Hello. Today we will cover debentures chapter, company account debenture. So here question, now all questions we are not taking. We are taking some few questions so that on the basis of those questions you can solve the other exam, other also. And one advice also to you go through all the examples given in the chapter also and read the chapter also for theoretical purposes. Okay, now question number 7 we are doing because it will cover all the previous questions. X Limited invited applications for 10,000 debentures at the rate of 20 plus 60 plus 20. 20 rupees application, 60 rupees allotment and 20 rupees final call value of 100. And then they have received the applications of 13,500 shares they have received, application received. Out of that, 8,000 were allotted full. 5,000 were allotted 40%. It means retained 60%. 5,000, 60%, 3,000 applications. So 3,000 applications are retained for allotment purposes. Its money, application money, will be used in your allotment. Rest 500, rest all they have rejected, it means 500. How it comes? 800 plus 5,000, 8,000 plus 5,000, 13,000. You reduce from 13,500, this 13,000. These two figures. So rest will be 500. Now we will go through the general entry. They are asking you the general entry. So here the entries are similar to your shares entry. Only thing is that where we are writing share, you will write the word debenture. Okay. And before debenture, you have to write the rate of interest to be payable on that debenture if it is given. If not given, you can leave that rate of interest. Okay, so here rate of interest is 14%. So all the entries will be where debenture word is there, starting word is debenture, we will write 14% debenture. Okay, and where share word was previously, we will here we will use the debenture word. So first we receive the money. So when we receive the money, bank account will be debited by how much? 13,500 shares at the rate of rupees 20. So you will receive 2,70,000 and it will be rated to 14% debenture application account. Otherwise here it will be share application account. So in place of share application, we are writing 14% debenture. Same. Then this debenture application account will be debited. Previously we were debiting share account. Here we are using share account. So this will be debited and it will go to debenture account 10,000 at the rate of 20 because 10,000 shares we are allocating. Then 2 lakhs. 500 we have rejected. So at the rate of 20 on 500 shares we will refund. That's why 2 bank account. When you receive money, you debit the bank. When you pay the money, you credit the bank account. So this is that. And the rest amount, the remaining 3,000 applications at the rate of 20 rupees. 3,000 applications at the rate of 20,000 rupees you will retain for allotment money. So this will 60,000 will go to allotment. These three totals should match with this one. Okay. Now the next is your debenture allotment money will be due. It will be due on 10,000 shares because you have issued 10,000. So allotment money will be due on issued share. 10,000, not on this subscribed debenture. So 10,000 into 60, it is 6 lakhs. It will credit to debenture account 6 lakhs. Now money what you will receive, you have already 60,000 which we group for debenture allotment. And debenture allotment is due by 6 lakhs. So the difference 5 lakhs 40,000. 6 lakhs minus 5 lakhs 40 only you will receive. So bank account debit to 14% debenture account 5 lakhs. And it will, debenture allotment account will square off because this is 540 and this is 6. So 6 lakhs will be equal. Now the final calls 14% debenture final call account debit. Final call at the rate of 20 is due on 10,000 shares. So 2 lakhs you will make a due entry to 14% debenture account. It is just like the share, like in place of 14% debenture, previously we are writing share final call account to share capital account. Similarly, here 14% debenture, what you will use in place of share, and it will be created to instead of share capital, it will be created to debenture account. Okay. So now money you will receive full amount, you will receive bank account debit to share final call account. So in this way, the question is over. Just to check whether for 10,000 shares, 100 at the rate of 100, full amount we have received or not. So 10,000 debentures at the rate of 100, it comes to 20 and 40. It is altogether 60. So 603 or 360. So 10 lakh rupees total should come. 10 lakh rupees total should come. So 270 once you have received. 270 bank account you have received. Then out of this 10,000 bank you have returned. So 270 minus 10, 2 lakh 70 minus 10, so 2 lakh 60,000 you have received. Then 5 lakhs 40 you have received bank account. And then 2 lakhs bank account you have, all together it comes to 10 lakhs. So your check is also okay. Okay, so this question is over. Now we will cover question number 10. Here itself. Question number 10. Now question number 10. Here B Limited purchased assets of the book value of 4 lakh. It has purchased assets of 4 lakh. So sundry assets account will be debited in their books. And the life to cover the liability of 50,000. So it will be credit to sundry liabilities account 50,000. This they will do. And the rest 3,80,000 is your sale consideration. It was decided to pay him by debentures of 100 each, settled at 3,80,000. So here you see these credit entries are not matching with the debit entries. Difference is coming here. So when difference comes here, it is goodwill account. If the difference comes to the credit side, credit difference, if credit difference it is, so then it is capital reserve. Then it is capital reserve. Then you will transfer the amount to capital reserve account. Okay. And if it is debit difference is there, debit difference, so then goodwill account is created. Okay. So here now the payment has been made by 3 ways. A is at par debentures are issued. So 3,80,000 vendor will be debited to debenture account and he will be paid debenture of 3,80,000 at par only. 3,800 shares. How much you will give to him? 3,800 into 100. These shares you will issue to them. Now, if you will give them at a discount of 10%, when the discount is given, so debenture values 10% is required here. Discount, because discount is given always on the debenture value. So how you will calculate? You will calculate 100 minus 10 because 10 is the discount. So your value will be now, debenture value is now 90 rupees. You have to give 3,80,000 rupees. So for 3,80,000 at the rate of 90, how much shares you will give? 3,80,000 divided by 90, it means you will issue 4,222 share debentures. So 4,222 multiplied by 100 rupees. Face value is 100. Face value in the question it is given 100 rupees. So 100 rupees. So amount will become 422 multiplied by 100. So 2 zeros we have put. Now it's 10% means 1 zero will go out. Amount will be this one. Now you check it. Its 10% should be this one. And the total of these two should agree with it. You check 2,842. So it is okay. So these two total should agree with this one. Agree. This check you have to do. Check. You have to check agree with this one. Agree with this one. Okay. Now if it is issued at a premium, what will happen? You will issue him the shares at the rate of 100 plus 10. 110. Each share's value will be 110. You have to pay 3,80,000. So we will divide it by 110. So number of debentures will come 3,454 only. So multiplied by 100, 2 zeros we have applied. Now it's 10%, 1 zero is gone, 35,540 is coming. But its total, so our general entry will be Mohan Brothers debit because he is to be paid this much. So Mohan Brothers will always be debited with the value to be paid to him, to the sales amount to be paid to him, sales consideration to be paid. It will be. Then debenture account you will be created 3,80,000 divided by 110 because here it is on premium. It is on premium. It is on premium. Here it was on discount. Here discount was there. Discount was there. So rest 10%, it's 10%. It's 10% should come here. So premium. Now you see the total should agree. But here it is not agreeing. In the question it is given, it was agreed that any fraction of debenture be paid in cash. Be paid in cash. So this fraction is remaining. This fraction is remaining. This fraction is remaining. So you have, because it is not 100. 100 is the book value. So 100 face value is not coming. So the fraction you have to pay in cash. By this way, this question is over. Now we will go to our next question. Thank you. Now question number 13 we are going to do. Question number 13, and here 3 questions are there, 1, 2 and 3, and you have to generalize. First condition is issued at 95 rupees and repayable at 100 rupees. So issue means bank account you will receive 95 rupees only. So bank account debit to debenture application account and allotment 95 rupees. Bank it is one time only application and allotment. Full amount is received, so both the accounts will be used. Then this account will be debited. Debenture application allotment account debit 95, so it will go up. Now you have to credit the debenture account by rupees 100. Face value is it's 100. So 100 rupees will be face value will be credited to the debenture account. Now the difference of 5 rupees is your discount, because 5 rupees discount you have given. So discount on issue of debenture you will debit by rupees 5. Okay, so this entry question 1 is over. At the time of redemption, they are asking the entry is face value kitna generalized. So repayment. So at the time of repayment, repayment here is not redemption, it is repayment word is they are using repayment. Okay, so we will write repay, repaid. Repay we will use the word instead of this repay. Repay. Redemption system is different. Okay, so repay at the time of repay. At the time of repay, what you will do? You will debit the debenture account. 100 rupees available in debenture account. You will debit it and pay it to the debenture holder's account. Because without making a due entry, you cannot pay to them. So first you will pass a due entry. Like in shares also, first you will pass a due entry. Due amount is due to the holder, and then you pay them. So this one question is over. Now question number 13.2. 13.2 debenture issued at 95 and repayable. And the repayable, not redemption, repayable. Here they are writing repayable. Repayable at 105. Repayable at 100. So here they are repayable at 105. So what you will do? You have received 95 rupees and credit to debenture application and allotment account just like the same, because issue conditions are the same. But so we will debit. Now debenture application and allotment account will be debited by 95 and credited to debenture account 100. And at the time of redemption, you have to pay 5 rupees more. So that amount you will has to pay premium on redemption of debenture account 5 rupees. So here you see discount 5 rupees you are giving 5 rupees, and at the time of redemption also repayment also 5 rupees extra you are paying. So when at the time of repayment you pay any premium. So then loss word we will use. We will not use discount word when 2 words are there. Discount or pay, not even single word. If premium on redemption of debenture is there, if premium word is there, then you use this account. Loss on issue of debenture account you have to debit. Okay, so this account will instead of discount we will pass loss on issue of debenture. 5 plus 5 it is 10 rupees and agree. Now at the time of repayment, same entries will be there. So debenture account debit 100 rupees, and then the premium you have credited 5 rupees. No, This is also to be paid. So debenture on redemption of debenture account, it will be also debited by ₹5. Okay, now 100 is also debited, 5 is also debited. To debenture holders account, due entry you have passed. It is your due entry. Okay, and this is your pay entry. Debenture holders account, debit to bank account. Now it's third part. Third part is debenture issued at 100 and redemption repay at 105. They are saying repay bill at 105. Repay at 100. Repay bill at 105. So you have received 100 rupees bank account debit to debenture application account. Now you see, I said whenever repayment is on premium, you have to use the word loss word. So though here only one repay premium word is here, you have to debit the loss. Loss on issue of debenture, loss on issue of debenture account. Loss on issue of debenture account debit. Loss on issue of debenture account debit, you will debit by ₹5. And credit to debenture account, ₹5, 100 rupees. And this loss you will transfer to premium on redemption of debenture, ₹5 you will make a credit balance. Now at the time of repayment, same entries you will write. So debenture account debit ₹100, premium on redemption of debenture ₹5, to debenture holder account 105, and then we will pay debenture holders account debit, because here payment condition is the same. Payment condition is 105. Here on premium. 105 is on premium. It is on premium, and here it is also on premium. So entries will be the same. Okay. So by this question number 13 is over. Now we are covering question number 15, where more questions are there. So 15:1, 10,000, 12% debentures of ₹100 each at par, issued at par, ₹100. At par means 100 face value and 100 nominal value at the rate of 100. So it is called as at par. And redemption at redeemable at a premium of 5. At a premium of ₹5. So here you see issued 100, repayment at 105. So just we have covered a question, issue 100, repayable at 105, means on premium. This 105 can be 108, 106, 107, but the entries will be the same as this one. So same as question number 13, but change that one. So here the whatever, it is for 100 rupees. Issue 100, redemption 105. So the same way you have to write the entry. Only thing, the amounts you have to multiply by 10,000 debentures. Okay. So question number 1, I am not solving. You copy it from here and change the amount. Now question number 2, 10,000 debentures at the rate of 100 each at a discount of ₹10. Means 100 minus 10, it will be issued at 90 rupees. And redemption at par. Redemption at par means redemption at 100 rupees. Here you see, it is 95 means at a discount. It is at discount. It was at a discount. Discount rate anything can be, but the entries will be same. Only amount changes. And repayment at par. So only the amount will change, but discount can be any amount. So here discount is 90 rupees. Here it is discount is 95 rupees. So only thing, instead of 95 you write 90 rupees. 95 you write 90 rupees. And discount you write, instead of 5 you write 10 rupees and multiply it by 10,000. And its redemption also in the same way, 2 entries you have to write by changing the amount. So question number 2 also I have not solved. I just tried whether you can understand these questions so that you can do yourself also. I can write here also the same thing I can write as I am explaining. But I just tried to you first solve this question, then you try this one. Now the third one is 5,000 shares they have issued at 5,000 at a premium of 500, at a premium, so 105 premium, and redemption at par. So here the question is the same. Issue at par, issue, not this question, issue has premium and redemption as par, but as the condition is not matching anyone. Here issue is not matching. Issue has premium. So it is on premium. Issue on premium. It is on premium. Okay. It is on premium. So I have so bank account you will receive, how much you will receive? You will receive 105 into 5,000 shares. To debenture application and allotment account, this you will receive. Then this account you have to close. The application and allotment account, debenture debit to debenture account 5,000 debenture at the rate of 100, and the rest difference will go to securities premium reserve account. This is the premium amount. This is the premium. 5% premium on issue premium account. Okay, it will go to here. Now at the time of redemption, this portion is over. Now at the time of redemption, you have to pay only 500 at par. This redemption is at par. At par. So 100 rupees only you have to pay debenture holder account. 100 into 500, so 5 lakhs. To debenture holder's account, it is the due entry and it is the pay entry. It is the pay entry. Debenture holder's account debit to bank account. So this is the payment. Up to third we have solved, and further 4 and 5 we will, after rubbing this, we will cover the 4 and 5. Here one thing you note, discount or loss. Wherever discount word, loss word is used, discount or loss on issue of debenture is written off in the year when issued. Whenever the share is issued, in the same year it is to be written off. But as per the below, how? First you have to debit the whole amount in securities premium reserve account. Whatever is available, you just debit the securities premium reserve account to the extent available. Now if it is all covered, or suppose loss is covered, then you need not to put this entry, surplus entry, you need not to pass. Otherwise, if this is short, to the extent available, if it is short, then you debit surplus rest amount. So rest amount works from a rest amount. So rest amount you debit to surplus revenue profit. It is the capital profit and it is the revenue profit. It is capital profit. It is revenue profit. You debit the revenue profit. Surplus, that is in statement of PL, you debit it, the rest amount, and credit to loss discount on issue of debenture. These are the written off entries. Here we have not written because now up to this question level, this written off condition has not arrived. Otherwise, if you want to put, you can put this wherever the wherever the discount or loss entries are there. Like here in this year, here you have to pass. In this year, here loss is there, so here you have to pass the entry. Means these entries should come here. This entry should come here. Okay, it should come here because loss is there. Like here also, you have to put here it is before repayment, you have to pass this entry. Okay, and here also loss is there. So loss is there, so it means this entry will come here also. Here also you have to pass. You can do this entry also. Now we will do question 15.4 onwards. Okay. Now 13.4 is here. Here machine was purchased at the rate for costing 95,000 and debentures were issued at par. So first we will purchase the machine. Machinery account debit to vendor's account. 95. Then vendor is given at par debenture. So vendor account debit to debenture account 95,000. Then at the time of redemption, this debenture account we will debit and to bank we will pay. So it is the redemption of the debenture on the due date. So 13.4 is over. Now 13.5 we are going to do. Here bank loan is taken of 25,000 and collateral security is given for 30,000. So bank account is debit to bank loan account, it is credited. 25,000 in bank account. When anything is received in the bank account is debited. it becomes an asset. And the debenture as a collateral when issued, we debit the debenture suspense account. So debenture suspense account is debited to debenture account 30,000 it will come. And at the time of repayment, cancellation of the collateral security. So when you will repay the loan, bank account will be debited to bank account. To bank account means payment you have made. When you have received the money, bank account is debited. When you pay from the bank, bank account is credited. And bank loan will be debited. Bank loan was a liability credit entry. Now you have repaid it. Okay. Now collateral is not required. So cancellation of collateral cancellation debenture. Now we will debit the debenture account and credit to debenture suspense account. These collateral where you have to show in the balance sheet side long-term liability. Long-term liabilities are there. Long-term liabilities is there. In the long-term liabilities, bank loan will come. Bank loan you will write. Okay. And then you will write debenture account less debenture suspense account. So it's two figures. So it becomes a nil figure. Only loan account will come to the outer column. And this debenture account and debenture suspense account, when you will let it together, it becomes a nil amount. So outside it will not go. So this is the position of the balance sheet where it is shown. Now we will solve question number 21. Here in question number 21, outstanding in debenture account was 30,000 and its redemption to be made of 10% premium. Okay. Now here the company we have taken as a non-listed company. So if it is a non-listed company, you have to make a reserve, debenture redemption reserve, 10% of outstanding. You have to create 10% of the outstanding. And that too before. So here, debenture redemption is reserve is created 10% of the outstanding value, and that too on the year it is repaid. Before to the year it is repaid. Suppose 31/3/18 you are repaying, so 31/3/17 you have to create 10% of the outstanding. So at that time, 31/3/17 outstanding is 30,000. So its 30,000 will be 3,000. Then after paying 10,000 in 18, what will become? The balance will become 20,000. Okay. So 12,000. So 10% of outstanding. So 20,000 will remain as the outstanding. So 10% of the outstanding means now you have to make the outstanding reserve as a 2,000 rupees. Outstanding should remain. Now after repayment of this in 19, you have repaid. So, before it, then 2010. From it was 17,000, then 1,000 you have repaid. So the balance should become now 2,000. Because 12 and 8, 20,000, so it will become 2,000. So after payment of this 12,000, how much you will be outstanding will remain? 8,000 means only 800 will be required. This is the position of non-listed. In case of listed company, banks, reserve bank, or housing finance company, housing companies registered with housing bank, they are not required to make this redemption reserve. Okay. Only unlisted other companies are required. Now, in the same year, before the year in which you have to repay in 13/1/18. So it starts here in 1/4/17. So in the same year in which repayment is to be done, you have to create a reserve equal to, you have to create an investment equal to 15%. This is applicable for everybody, either listed or not listed. 15% of the outstanding of the amount to be repaid before 30th April. In the question, they have given 1/4/17, April 17, 1st April. So we are taking 1st April. but you can, as per rule, it could have been made before, on up to 30th April also they could have made. So in the first year you have to pay 10,000, so it will be 1,500. Second year you have to pay 1,200. It means you require 1,800 rupees in debenture redemption investment account. So here 1,500 was already there. Only thing 300 you have to increase. 15 plus 300 it will become 1,800. Now in the next year your outstanding is 800. So you will require 15% of 8,000. Means 1,200 is required. Already you have 1,800. So 600 you can withdraw in that year and 1,200 will remain. Okay, and after all the repayment, this 1,200 will also be transferred, will be sold out. After that, it will be sold. The investment will be sold and created to bank account. Okay, and here after everything is over, the amount will be transferred to general reserve. Okay, now we will solve the question. Solve the question. So first 31,317 will come. 31,317 will come because you have to pay it 31st 18. So it's start year. Start year is before. Start year is before year. Before year you have to pay. So it is before year is before year 31,370. So you will debit statement of PL account and credit to debenture redemption reserve account. You will write it DRR. Okay, 3,000 you will write it is equal to the outstanding value. At this time 31,370 your outstanding was 30,000 because this is the before figure 31,370 32. Then on 1st April of the same year in which to be repaid. In 18 it is to be repaid. So financial year will be April 17 to 31/18. 31/3/18. So in the on 1/4/17 because question it is given. Otherwise 30th April we will take. Debenture redemption advantage. Investment you will purchase from the market by the bank account. Okay, 1,500 you will purchase because you have to pay 10,000 rupees. So 10,000 15% you will purchase. Now 31/3/18 will come. You will debit the debenture account. Premium on redemption of debenture account. 10% you will debit and credit to debenture holders account and pay to debenture holders account. Now here you see you have paid 10,000 rupees. So outstanding has reduced to 20,000. So now you require the reserve as 2,000 only. It means the excess 1,000 is there. So excess 1,000 you can transfer to general reserve. That's why DRR, debenture redemption reserve, we have debited 1,000 and credited to general reserve because 10% of 10,000 paid, outstanding reduced to 20,000 and balance you have to make up to 2,000 only in the reserve account. So this will be. Now 18 year will come. 1/4/18 you have to repay in this year only 12,000. So 15% of 1,200 is 1,800, but already 1,500 is there in the account. So only 300 rupees investment you have to make. So the debenture redemption investment account will be purchased from the market to bank account 300 because debenture redemption made 15% of repayable amount. Repayment amount is 12,000 and its 15% is 1,800. 12,000 rupees you have to repay and its 15%. Its 15% is equal to 1,800 and already you have 1,500. You have already created 1,500. So this 15 and this 15 debenture redemption will become 1,800. Okay. Now while paying 1/4/31/3/19 will come and you will pay debenture account debit to premium on redemption account debit. Premium on redemption account debit you will make to debenture holders account and debenture holders account debited to bank account. On premium 10% premium you will pay this 12,000 rupees debenture. Now on 31/3 same day 31/3 you see now outstanding has again reduced by 22,000. Only 8,000 outstanding is remaining. It means you require only 800 rupees in the debenture redemption reserve account, whereas you already have a balance, you already have a excess balance. So you already have a balance of 2,000. First we have made 3,000 rupees reserve. Then 1,000 reserve we have sold. So reserve account is having 2,000 rupees. But you require only how much? You require only 800. It means 1,200 is excess. This excess amount will be transferred to general reserve. 10% of 1,200, 2,000 is paid. Outstanding reduced. So when outstanding is reduced, this 12,000, 10% is not required. 10% of 12,000 is paid. To its 10,000 is not required. Okay. So this not required will be transferred to general reserve account. Okay. This is over. Now the next year will come for 19 because you have to pay in 20. So 1 for 19 you will debit. Now in 19 how much you will require? For 8,000 15%. 8 DRI made equal to 15% of repayable amount 8,000. 8,000 1,500 it is equal to 1,200. But you already have 1,800. 1,800 in the account. Whereas you require only 1,200. It means 600 is the excess is there. So this excess will be sold out. Bank account debit to DRI. It will be sold. Investment will be sold because it is excess. Excess. It is excess. Excess will be sold. Okay. Now on 31/3/20 you will pay 11 debenture account debit to premium or redemption of debenture debit 800 to debenture holder 8,800. Now debenture holder will be debited to bank account. This is your payment. This is your payment entry. Okay. Now you see, now DRI is also not required because everything has been repaid and this reserve is also not required. So this 1,200 now it will be sold out. Okay, bank account debit to debenture redemption, investment account 1,200 it is sold out, unutilized. Okay, it is not required. And narration will write unutilized amount will be investment has been sold out. And debenture redemption reserve also, this 800 is now not required. So this 800 you will transfer to general reserve. Okay, by this chapter is over. Other questions we are not covering, otherwise it will become a very lengthy chapter. Okay, thanks for watching. Please share with your friends also. Thank you.